Let's talk about tax preparer fraud and the fallout, why clients get blamed, and how to do damage control. If your tax preparer committed fraud, you may think they're the problem. But here's the hard truth. The IRS and most taxing authorities from states, they'll come after the taxpayer first because you signed the tax return. You did so under penalties of perjury, and that single fact changes everything. So why does preparer fraud hit the client? Tax preparer fraud rarely ends with the preparer. It triggers IRS and state audit notices. If you claim a refund hold. It can trigger franchise tax board inquiries in California, wage levies, interview requests. Why? The government treats your returns as sworn statements, even if someone else prepared it. If deductions were invented, credits inflated, or income purposely understated, the starting assumption they use is simple. You filed it, you benefited from it, you're responsible. My preparer did it is not a shield. Many taxpayers say, I didn't know that happened, my preparer did it. That argument can help, but it is never automatic. The IRS asks very dangerous questions, like, what did you know? What did you review before you signed that return? What records did you provide the preparer? Did the return make sense to you? Did you ignore obvious red flags? Signing a return with income you never earned to get an earned income credit, or claiming deductions you never incurred to reduce your tax liability? Those support inferences of willfulness, what you were thinking. And willfulness is the line between just simple civil penalties and criminal tax exposure. Let's talk about ghost preparers and those red flags. Some warning signs are obvious. When a preparer refuses to sign a return, that's a ghost preparer. They don't list their PTIN. If their fees are based on refund size, red flag. If you get promises of guaranteed refunds, red flag. If they rush signatures without giving you time to review. If others hide in plain sight. Sudden Schedule C businesses showing a loss. Large cash contributions you don't know anything about. Repeated losses in profitable industries. These patterns are tracked, especially when they appear across multiple clients of a dirty preparer. Why talking to the preparer can make this exponentially worse. Here's a critical mistake. Letting the same preparer who cooked your return handle the audit. That's insane. Why? Because preparer communications are not privileged. Any emails, drafts, any explanations, work papers, they can be all subpoenaed. And that preparer may not attempt to protect you. They may throw you under the bus to try and save themselves. Say, it wasn't me, it was them. In criminal, federal, and state tax matters, there is no confidentiality shield between you and your preparer. Every explanation becomes evidence in the making. So how do you do damage control? What actually helps? When you suspect preparer fraud, first of all, freeze the relationship. Preserve all records exactly as they existed. Obtain IRS transcripts. Control communications. Avoid any sworn submissions without legal strategy. Even filing a preparer complaint could backfire on you if that's done without understanding the resulting criminal tax exposure that creates. You gotta know how to time and frame any corrections of the matter. Listen, here's how we go about diffusing escalation when this happens all the time. Preparer fraud cases escalate because they create predictable patterns. Our job is to control the narrative, preserve privilege, separate client criminal intent from preparer misconduct, and at all means prevent civil audits from turning criminal. Our staff of specially trained CPAs work under attorney supervision. The goal is simple: stop escalation before intent is inferred.